Hey everyone, thanks for jumping back into the cryptoverse. Today we're just going to be making a live animated version of the risk versus price graph from a request by Sunny. He just said excellent content. It'd be interesting if you could do a time lapse of the price versus risk graph. It may help visualize the cycle. And that was from this video here. So we're going to go ahead and do that. So I'm going to hit play. Each data point represents a single day. And as we print more data, we're moving forward in time from fairly early on out to present day, and we're doing this so that we can get an idea of how the cycles operate with respect to the price and the risk metric that I made. So that if you're not familiar with this, I optimized a function to try to predict future Bitcoin peaks and valleys. It works, hindsight's 2020, obviously, but it certainly works in hindsight looking at the three prior peaks. But I've also actually investigated a hypothetical, next market cycle, and then looked at the risk for that, and it does seem to work out even with Bitcoin getting to a little over six figures, even though that would be a significant reduction in your ROI compared to past market cycles. It does show the metric does account for diminishing returns and lengthening cycles. So, I had to use a lot of data early on just to try to optimize this, but this move here is that first move that we had in the last market or two market cycles ago, and then we came back down. The price, it came back down, but then we had that second peak. So this was around the 2013 timeframe. If you're not familiar with that. But one of the interesting things that you would note is that during this time, the risk got over 0.9, just like it did over here, and then it came down. And as you can see, it curves to the left. Then the Bitcoin price is dropping because the price of Bitcoin is on the x-axis, risk is on y. And so as we're moving to the left, price of Bitcoin's dropping. Then at some point we reach a bottom, and then we start moving back up, and the risk moves up with it. But the interesting thing is, once we get back to the price that we were at our all-time high from the previous cycle, you can see that the risk is a lot lower. I get a lot of people asking me, well, what if the price is this? What is the risk? Well, you have to tell me how we get there. If Bitcoin were to jump to 50,000 tomorrow, then the risk would obviously be through the roof. But if it's a slow move up over the next 3 or 4 years, then obviously the risk level would be lower. So it depends on how we actually get to that price. But anyways, you can see this. We have a peak, we come down, we form a little loop, and then we zigzag back all the way back up to a new high. And I just want to kind of scroll through this. So you can see we come down, we have our loop, we zigzag a little bit, and then we quickly shoot up. But these peaks, if I just scroll through them really quick, you can see how sparse they are. That they're not very dense, their distribution in this region. We spend most of the time down here where the price isn't doing as much. And if you actually go and look at it, Bitcoin makes some of the largest moves of the year in only a few days. So if you're out of the market on those few days, you could really miss out on a lot. But you can see how quick they are, and then people basically just pine for these days again. Because you spend most of your time down here where the risk is below 0.4 or below 0.5 in that region, which I would say is more of the accumulation zones. So let's just keep scrolling so you can kind of see during that last market cycle of this bear market of 2014 and 2015, we had a little loop. And then the risk kind of zigzagged for a bit where price was, going up and down and testing the waters. And then finally we shot off pretty quickly and then came back down. We formed another loop, and now we're pretty much back in that zigzag pattern of, trying to find our levels of support as we slowly climb the ladder. But the point is by the time that Bitcoin does get to 20,000, assuming that it does, then the risk will be, maybe it'll be around 0.5 to 0.6, somewhere in that regime, which is a lot better than the last time when it was between 0.9 and 1. So I think this is, informative. I hope you guys like the video. I know it is a bit redundant from this video, but someone did want to see it animated. So let me know if you guys like the animation, if you prefer to see things animated rather than just see the graph. and how helpful that is. If you're curious about the risk indicator, I do publish updates on it every month or two on YouTube. If you want to get more frequent updates, then check out the Patreon channel in the description below. And we do have a private Telegram group where I'll post updates as well as discuss other things. So I think that will wrap it up for this video. If you guys missed Ethereum letters, you can check out the free version on my website at intothecryptoverse.com. So I just published that a couple days ago. And otherwise, if you just want to enjoy the free content, that's fine. I would recommend joining the public Telegram group. We also have a Discord channel, so check those out. Hopefully we're going to close in on 2,000 members here in the next month or so, and just continue to see the community grow with people that are level-headed and wanting to be a part of the community as we watch the price of Bitcoin hopefully mature over the next several years. All right, guys, that will wrap it up for this video. I will talk to you next time. Bye.